Oil and gold, of course, they have their own move and what the kind of indicators we're gathering in. Let's also gather in, and in fact, we'll just address it, but let's put it in a more perspective way for our viewers. What were the key commentary that came in from the Fed chair? Now, Jerome Powell, as he indicated that the US Central Bank will not be as aggressive in easing. In fact, he did indicate that the quantum of the next rate cut will most likely be smaller. Additionally, he also said that depending on the health of the economy, policy over the time will move over to a more neutral stance. But there is no preset course. In fact, while he spoke, we saw that equities fell and treasury yields they came up. Now, the bond yield are nearly 3.8%. So that's a kind of move that we must track in because it's a key indicator which comes in from the central bank's action.
Well, absolutely. That is something that we're keeping a very close eye on. Let's also get going with some other commentary, keeping it with key commentary, but shifting focus to China then as part of 75th anniversary celebrations for the People's Republic of China. In his speech, Chinese President Xi Jinping said that they see no challenges faltering the country's growth. He also reiterated Beijing's firm opposition to Taiwan's separatist activities while calling for both sides to increase economic and cultural cooperation.
Okay, now shifting focus to Japan now. The Bank of Japan and the Tankan report, which shows that firms expect inflation to be at 2.4% a year from now. Further, it's expected that the consumer prices will witness a rise of 2.3% 3 years from now and 2.2% over 5 years. Remember, the survey will be among key factors that the central bank will scrutinize in setting monetary policy and even releasing the fresh growth and inflation forecast at its next meeting, which is slated on October 30th and 31st.
Alright, well, tell you what, as a reminder for our viewers, South Korea, Hong Kong and mainland Chinese markets are shut on account of a public holiday, but what unfolded in the previous session? Chinese stocks scaled the fastest rally since 2008. Shanghai surges a whopping 8% as well, and with a big stimulus push, will the Chinese economy then pick up momentum? And while it does, what does that spell for India as well? Let's listen in to the view coming in from Geoff Dennis, who's an emerging markets commentator.
I think obviously things are going to be different across different countries, but I think the most important difference between the US banking system and other banking systems across the emerging markets are that you have a much greater concentration of emerging market banking into, generally anyway, into a number of small and therefore well-capitalized banks. So bear in mind that this began, albeit Silicon Valley Bank is a big bank, it's still a regional bank. And of course, you've had the fallout with First Republic and worries about other banks. The Signature Bank is a small bank. But if you look at India, you look at Brazil, you look at a lot of other countries across EM, you've got a much, much more concentrated banking system. And therefore, I think that necessarily means the risk of small banks causing problems is much lower. Generally, however, I would say I think regulations on banks are pretty good across most emerging markets, not across the board, but still across most markets. I think what's fascinating here is as we've seen these three banking episodes, SVB, Signature, and Credit Suisse, happening, I believe, for essentially different reasons, albeit within the rising interest rate environment that we're getting, we've seen across the world, especially in the US. You've seen no talk whatsoever of problems in emerging markets. And I think that's primarily, as I say, got to do with the concentration of emerging market banks into banking systems into much bigger banks. And I think that cannot be ruled out. And I think in some sense, this has been a really pretty good period for EM in terms of that particular factor.
All right, that's what the chart.
If you like this video, then like, share and subscribe to ET Now.